the richest man on the planet, and a $0 federal tax bill. The IRS data that changed everything. In June 2021, the investigative newsroom ProPublica published the most explosive tax story in American history. They had obtained thousands of pages of IRS data, the actual tax returns of the wealthiest people in the United States. And what those documents revealed was staggering. Between 2014 and 2018, Elon Musk, a man whose personal wealth grew by $13.9 billion, paid a total of $455 million in federal income taxes. That sounds like a lot, until you do the math. His true tax rate, taxes paid divided by wealth gained, was just 3.27%. And in one particular year, 2018, Elon Musk paid exactly $0 in federal income tax. Not a reduced amount, not a small percentage. 0. This is how he did it. ProPublica didn't just leak one person's tax returns. They obtained data covering more than 15 years of filings from thousands of the wealthiest Americans. The source has never been identified. The Justice Department opened an investigation, but no charges were ever filed. What made the data so powerful was a single concept ProPublica invented: the true tax rate. Traditionally, we measure tax rates based on reported income. But ProPublica asked a different question. How much tax did these billionaires pay relative to how much richer they actually got? The answer was devastating. Warren Buffett's true tax rate was 0.1%. Jeff Bezos, 0.98%. Michael Bloomberg, 1.3%. And Elon Musk, at 3.27%, was actually one of the higher payers among the ultra-wealthy. The system wasn't broken. It was working exactly as designed. So how does a man worth tens of billions of dollars pay zero federal income tax in a single year? The answer lies in the difference between wealth and income. In 2018, Musk's net worth was roughly $22 billion, mostly in Tesla stock. But his taxable income, the number the IRS actually cares about, told a completely different story. Musk reported no salary from Tesla. He earned some investment income, but he also reported significant losses and deductions that wiped out his entire tax liability. The IRS doesn't tax wealth. It taxes income. And Musk had structured his financial life so that his income, on paper, was either zero or negative. His billions in Tesla stock gains, unrealized. And in the American tax system, unrealized gains simply do not exist. Most people earn money through a paycheck. Their employer withholds taxes automatically: income tax, Social Security, Medicare. The money arrives already taxed. Elon Musk doesn't work this way. His compensation from Tesla has been entirely in stock options, performance-based awards tied to the company hitting specific market cap milestones. No salary means no automatic withholding. No paycheck means no payroll taxes. When Tesla's stock price tripled, Musk's wealth exploded by billions, but none of it was taxable. Stock options aren't taxed when they're granted. They're not taxed when they vest. They're only taxed when they're exercised, when the holder actually converts them into shares and sells. Until that moment, the wealth is real, but the tax bill doesn't exist. If you can't sell stock without triggering a massive tax bill, how do you actually spend your billions? The answer is deceptively simple: you borrow against them. Musk, like many ultra-wealthy Americans, takes out loans using his Tesla shares as collateral. Banks are happy to lend. The collateral is worth billions, and the interest rates are remarkably low, often between 1% and 3%. Here's the critical part: loan proceeds are not income. When you borrow $1 million, or $10 million, or $100 million, the IRS doesn't consider it taxable. You received money, but you also created a liability. From a tax perspective, nothing happened. So Musk can live a billionaire's lifestyle, buying properties, funding SpaceX, acquiring companies, all while reporting minimal taxable income. The wealth grows, the spending continues, and the tax bill stays at zero. Tax professionals call this the buy, borrow, die strategy. Step 1. Buy assets that appreciate in value but aren't taxed until sold. Step 2. Borrow against those assets to fund your lifestyle without triggering taxes. Step 3. Die. That last step sounds dark, but it's the most powerful part. Under current U.S. tax law, when you die, your heirs receive your assets at their current market value, not the price you originally paid. This is called the stepped-up basis. Every dollar of unrealized capital gains accumulated over a lifetime is simply erased. The tax bill that was deferred for decades doesn't just get passed to the next generation. It disappears entirely. A billionaire who never sold a single share during their lifetime can pass hundreds of billions to their heirs, completely tax-free. Let's put Musk's tax situation in perspective. The median American household earns about $75,000 a year. After the standard deduction, they pay roughly $9,000 in federal income tax, an effective rate of about 12%. A nurse earning $85,000 pays an effective rate of around 14%. A software engineer earning $200,000 faces an effective rate of roughly 20%. Now consider Elon Musk. Between 2014 and 2018, his wealth grew by $13.9 billion. He paid $455 million in federal income taxes. His true tax rate, 3.27%. That means the nurse, the teacher, the software engineer, all of them paid a higher percentage of their economic gains to the federal government than the richest man on earth. The tax code is progressive on paper, but when you measure it by wealth growth, it becomes deeply regressive at the very top. Musk wasn't alone. ProPublica's data revealed a pattern across the ultra-wealthy. Jeff Bezos, whose wealth grew by $99 billion over the same period, paid a true tax rate of just 0.98%. In 2007, Bezos paid zero federal income tax while his Amazon shares increased by $3.8 billion. In 2011, he again paid zero and even claimed a $4,000 child tax credit. Warren Buffett, the so-called Oracle of Omaha, had the lowest true tax rate of anyone in the dataset, 0.1%. His wealth grew by $24.3 billion between 2014 and 2018. He paid $23.7 million in taxes. George Soros paid no federal income tax for 3 consecutive years. Carl Icahn, despite being worth over $20 billion, paid zero in 2 separate years. The strategies differ slightly, but the principle is identical. Keep wealth and assets, avoid realizing income, and borrow to spend. This is the question everyone asks, and the answer is uncomfortable. Yes, everything Musk did was completely legal. There's no fraud, no evasion, no offshore accounts hiding money in the Cayman Islands. Every strategy, stock-based compensation, borrowing against shares, the stepped-up basis at death, is explicitly written into the U.S. tax code. These aren't loopholes in the traditional sense. They're features. Congress created these provisions, often with bipartisan support. The carried interest provision benefits hedge fund managers. Accelerated depreciation benefits real estate developers. Stock option deferral benefits tech executives. The system is not broken, it was built this way. The question isn't whether billionaires are breaking the law. The question is whether the law itself is fair. In late 2021, something unexpected happened. Elon Musk posted a poll on Twitter asking whether he should sell 10% of his Tesla stock. The internet voted yes, and Musk began selling. But the real reason wasn't the poll. Musk had stock options expiring in August 2022, and exercising them would trigger a massive ordinary income tax event. Over the following months, Musk sold approximately $16 billion in Tesla shares. The resulting federal tax bill, roughly $11 billion, was the largest individual income tax payment in United States history. Musk even tweeted about it, saying, and I quote, "I will pay more taxes in 2021 than any individual in history." He was right, but critics pointed out the context. This payment came after years of paying almost nothing. $11 billion sounds enormous, but relative to his total wealth, which exceeded $300 billion, it was still less than 4%. The Elon Musk tax story isn't really about one man. It's about a system that treats wealth and income as two completely different things, and how that gap allows the richest people on Earth to pay less than the rest of us. If this video changed how you think about taxes, subscribe for more deep dives into the world's most powerful tax strategies.